deputy generals have issued enforcement memoranda to other U.S. attorneys about how to enforce drug laws in states that have legal cannabis. The first memo came out in 2009. The most relevant and probably most important memo issued in 2013 from U.S. Deputy Attorney General James M. Cole. That memo set forth 8 enforcement priorities that the federal government looks for in states when states are rulemaking and enacting legislation to control the cannabis industry in a given state. The 8 enforcement priorities are fairly obvious. Don't do business with drug cartels, don't deal drugs to kids, don't allow product to divert over state lines. That memo also says that the federal government will rely on states to do the policing for them, and that if a state does not have robust enough state regulation to contain this industry, the federal government is going to come in with the full force of federal law behind it. So far, so good, right? In the 4 states that have legal use, full-blown legalization, that's Alaska, Oregon, Washington, and Colorado, and so far, the federal government has stood by its word that it will stand down while this memo is in force. Obviously that could change. We're in a presidential election, and depending on whether it's a Trump or a Clinton type, we could have a whole new world beginning in 2016. Now, having said that, I would like each of you to respond to this question as much as you want. What do these memos mean for investors in the cannabis space, if anything at all? And how do you deal with them yourselves on a daily basis with your clients and with your companies?
We view these memos largely as temporary policy. The industry is looking to move forward, and we need to grapple onto any sort of, like a rock climber, whatever nub we can grapple onto, we want to grapple onto that. And I think these memos right now are kind of the environment we're operating in today, and we recognize that they are temporary.
So, being a Canadian operator, I'm lucky to kind of look at this from the outside in. We do have a federally administered medical cannabis cultivation system in Canada that does have some pretty stringent rules that also don't fluctuate from state to state or province to province. Now, when you look at the differences between the Ogden memo and the Cole memo, or memos, you see this progressive sort of softening of language. And what's interesting to me is that it went from sort of early cannabis, no, never, never, to let's look at more of the social impacts of what cannabis, has on particular states, keeping it out of the hands of kids, keeping it out of drug driving, and so looking at more of the negative impacts and how to mitigate those more effectively. So to me, an interesting side effect of this that I see across the cannabis industry is if you believe that the trend continues, the language continues to get softer, the memos continue to get more tolerant, Congress' position or any state's position continues to get softer, you actually have an economic incentive to front run this trend. In Colorado, that was a great example of that, as we saw that there were actually black market or gray market cannabis constituents that were grandfathered in to their systems. So I think it's an unintended consequence of this language getting softer to promote investors, taking risks, and perhaps that should be revised or reviewed with more conclusive policy.
For us, we really focus on building an internal compliance team. So we rely on, I just saw a count last week, 16 different law firms around the world, around the US, to advise us. So our legal costs are a little bit different than a typical private equity holding company. And then internally, we recruit people who focus entirely on compliance. Our general counsel spent 15 years with the Department of Justice and the DEA. We just hired someone about 4 months ago from the Federal Reserve Bank, who's based in San Francisco and spent 12 years with the Federal Reserve. So they're both focused on federal compliance, on banking compliance, and that helps us not only comply with the complexity of federal law here in the United States, but the complexity of federal law in Canada, as well as following the regulations that are very different from state to state, whether we're talking about something in California or in Washington or Colorado. But it's important to build out the right team in order to give our investors comfort as they're performing due diligence on us as a firm.
Yeah, I mean, I think that nails it. Compliance is absolutely key here. And then when I say compliance, obviously we talk about compliance with state laws, making sure you're in constant compliance with whatever laws and regulations exist in each state, and they are quite different from state to state, and also compliance as far as you can with the Cole memo itself. When it comes to, and so when we advise clients, it really comes down to you have to make sure that everything that you're doing is completely above board. That's the best way to protect yourself, certainly from interference with the federal government. When we look ahead, you bring up the prospect of new administrations. The Cole memo under, if we have, say, a Trump presidency, the Cole memo will go away. Chris Christie will be the next Attorney General if Trump is elected. That deal is done. We can talk more about that later, but and there's no doubt Chris Christie is probably the biggest drug warrior, or one of the biggest drug warriors amongst elected officials in the country. So that Cole memo will go away. Things may get a little bit more difficult. That said, what actually gives me a little bit more comfort, and when I advise clients on this, is not so much the Cole memo, but the enabling legislation that followed it, what used to be called the Hinchy Rule, but now the Farr-Rohrabacher Amendment, which is passed now in a couple of successive Congresses, which is essentially a rider to the Justice Department appropriations or spending bill, which prohibits the Justice Department, which includes the DEA, from spending any money to interfere with businesses that are in complete compliance with state law. And so even if we have another administration that comes in, as long as we can continue to get that reauthorized every year, and the fact that it's actually been reauthorized by larger majorities each year, even though Congress has become more Republican, more and more Republicans are coming on board with this. The fact that we've been able to pass this in successive Congresses that have gotten more Republican or more conservative makes me optimistic that this will remain in place and will somewhat tie the hands of the next administration should they decide to try and roll back some of the progress that we've made under the current Justice Department.
Yeah, and asterisk on the appropriations rider, there was a challenge to it in federal court in the Northern District of California in a criminal case. And essentially the DOJ said, well, wait a minute, this rider only says that we can't intervene or mess with states trying to implement medical marijuana laws. You never said we couldn't pursue operators. At least that's not what the black letter of the law actually says. The federal judge disagreed. The DOJ actually tried to appeal that to the Ninth Circuit, and then just last week decided it's a wash. We're not going to actually pursue it. So now we know that appropriations rider has way more bite than we originally thought. Now, I'll ask for those of you who pitch investors and deal with investors all the time, do you ever get someone that says, wait a minute, yeah, memos are nice, and that appropriations rider is good for medical. I want to be an adult use market. I'm not down with it being illegal under federal law. Do you get people that say that and just completely back off? Or is the attitude that I don't care, I see where this is going, and I'm ready to take the risk?
It varies. We've definitely talked with folks and gone really far down the road with investors, potential investors or potential operators, far down the road in diligence, and we've seen plenty of cases where at the last minute they have a follow-up conversation with their attorneys and decide can't take that risk. You see that a lot more from folks involved with institutional investment firms. I think people who have been in financial services but then leave are willing to take a little bit more risk. We've definitely encountered situations where we've had folks who want to invest, want to put money to work. They work for a large financial institution. They're looking to put their own money to work in the space, but when you work for a hedge fund or a private equity firm, most of these firms, even if you want to invest your own private money, you have to get approval from the state, from your firm's compliance department. And so we've seen lots of cases where people were ready to make 6 to 7 figure investments in the industry, and at the last minute their firm tells them they can't use their own money that way. So that plays a real factor, not just in the individual's decisions, but also the institutions that they may work for, even if those institutions themselves are not looking to put any money to work themselves.
Speaking for the smaller investor, that would be the investor operator. I would like to say that the definition of entrepreneurship has been defined as the antonym of risk averse. If you're not embracing risk and chasing risk, that is the way entrepreneurs really kind of make the money, by getting into the market before everyone else does. Instead of waiting and seeing and being risk averse and saying, I'm going to let everyone else get to the market first, the real entrepreneur is going to jump in and embrace that risk and know that risk is there in a smart way.
Got it. Okay, now let's highlight a big difference for our audience here. There are cannabis companies, right, that actually produce, process, distribute, retail, and then there are ancillary companies that, how would you guys characterize this? Support services, the helpers, landlords, lawyers, etc. Can one of you give me a definition of an ancillary service business, generally speaking? Or any of you?
I'd like to maybe jump in on this one. I see so many different clients in my practice. And a lot of clients that are cannabis operators come to me already with an ancillary business that they call their management company. But that management company is so intertwined with the actual operation and common board control that isn't really all that ancillary. Then you have the opposite end of the spectrum. That would be the law firms like Hilary's firm and CPA firms where our customers are in the industry, but we really don't touch cannabis. We don't take legal title and, other than the fact that we have licenses we have to protect, probably not as much at risk. Then you have the in-between companies. These are the companies that might have possession, but not legal title. For example, a laboratory. So a laboratory, are they ancillary? If the federal government walks in, they'll find cannabis on their premises, but they don't own that cannabis. Another good example is cultivation firms for hire. There are business models out there where a license holder will hire a third party to do their cultivation for them, where the legal title of the cannabis remains with the permit holder. But for all intent and purposes, the possession and a lot of the actual day-to-day cultivation work is being done by ostensibly a third party that's a cannabis cultivator for service company. So maybe a couple different ways to think about an ancillary business.
I'll jump in here too because my company is also, we kind of bridge the gap between industrial agriculture, where we have a lot of greenhouse experience, PhD biology, or some really cool operators from that side, and then also deep focus in tech. Vancouver, BC, where I'm from, has a great tech community. We sort of think of ourselves somewhere between Silicon Valley North and the Emerald Triangle North, and that's a great position way to see business. The tech industry in Silicon Valley are great at challenging the status quo, and I think they sort of typify the entrepreneurial spirit that we just talked about. So you do have a great opportunity in cannabis tech as well, which isn't necessarily doing anything illegal. They're not facilitating cannabis transactions in entirety. They're not cultivating cannabis. Really cool companies like Leafly in Brennan's portfolio that allow people to access information, allow people to communicate, allow people to create social networks. These are companies that are accelerating in value substantially. BioTrack, which is a seed-to-sale tracking platform that's actually state mandated in Washington, I believe they just achieved a valuation of over $160 million. Meadow is a delivery application. They haven't actually ever delivered cannabis, but they're still valued in the tens of millions. Ease, there's a variety of different companies that are capitalizing on these opportunities from a software standpoint. And I think that that's a really interesting place to play if you don't quite have the sand for investing in actual cannabis cultivation.
Anything else to add, guys?
Yeah, I mean, a lot of investors who initially get into this on the ancillary side because they perceive it as being less risky, as being what we call direct-to-plant business, essentially a dispensary or cultivation facility or processor. And there is some real truth to that. In our own formation, we were started with seed funding from a guy named John Sperling, who was a longtime philanthropic supporter of reform, and was the founder of the University of Phoenix, which is a very large for-profit company. Was a very large for-profit company. But when we started the company as a consulting firm, one of the reasons we did so was because John had a very large portfolio and a lot of risk managers around him, and they would not have been comfortable with us touching the plant. That was too risky. They weren't exactly comfortable with us just being a consultant, but that was about as far as we could push it at the time. I don't think we really fall into ancillary anymore. We now have a brand that actually is going for licenses. But so you see a lot of folks enter that. To play devil's advocate just for a moment, though, The reality of the situation is if the federal government were to want to crack down hard, and I don't see that happening, it certainly has been going the opposite direction for quite a while, conspiracy laws are very vast. And if anybody thinks that just because they're in a consulting business or they're in a point of sale business or they're in a technology business that they would be immune from some kind of federal prosecution, they're kidding themselves. Even a point of sale company that absolutely could be brought up on conspiracy charges for helping to facilitate a very large violation of the Controlled Substances Act.
Yeah, there's also my personal favorite, aiding and abetting.
Aiding and abetting, exactly.
Let's not forget our good friends in that category. And now that you brought it up, are any of you afraid of federal prosecution at this point, based on what you do? Let's say a super zealous prosecutor that says, hey, conspiring to violate the Federal Controlled Substances Act and aiding and abetting, because let's say you allow these dispensaries or producer-processors to advertise on your websites, or you run their ads in some form of media. Are any of you afraid of that as a realistic situation at this point?
I'll start to go back the other way. Not today, I'm not. And that largely has to do with, I was a little bit more so, 6 years ago, 7 years ago. That was a real concern. I mean, certainly businesses that were operating in the last term of the Bush administration or the early term of the Obama administration, there were raids. There were real raids. People are still sitting in prison serving 10 to 20 year mandatory minimum sentences for doing things that they thought were completely legal under state law at the time. That doesn't really happen anymore, and I know that the way that we operate our business, we are sort of overboard with compliance, maybe not quite to the extent that privateer is, and for good reason, but still, everything that we do, we make sure is 100% according to the rules, and so we're not really concerned about it today. I think anybody who is trying to skirt the rules in any way should be concerned, but it is something that that you do have to think about down the road. If we do have Attorney General Chris Christie a couple of years from now, it might keep me up a little bit more at night than it does today.
Me too.
I sleep really well at night. It's not something that concerns me today. I know the industry really well. We have 250 employees who understand this industry. They're smart, they're professional. They come to us from Starbucks and Amazon and Microsoft and T-Mobile and the DEA and the Federal Reserve. Our biggest asset is data. We understand this industry. We understand it around the United States. We understand it around the world. And we've built a network of people who provide us with information. And over the last 6 years, we've built that network. We've built that volume of data. And I know all the people in the industry. I know the companies. I know them really well. And I sort of think of about a half a dozen companies as the canaries in the coal mine, right? They're the first ones that are going to get arrested, right? They're the targets, and everything we do is to make sure that everything we do is compliant. But I know who the canaries are, and if the federal government targets them, then maybe I might not sleep as well. But right now, I sleep.
I'm really not worried. So Canadian. We're really lucky to have, and I don't want to front-run potentially a later question, but a robust and federally administered medical cannabis cultivation regime in Canada, which is an excellent investment opportunity, by the way. I think also just culturally, the federal government in Canada is just a lot more aligned around let's all speak the same language. We're not going to have CSIS, which is our very junior equivalent of the FBI, come knock down our door at any time soon. But when we do start to look at licensing opportunities for our cultivation technology in the United States, it's something that we've got to be wary of. So thanks for the canary in the coal mine thing. I'm glad that we don't have to worry about that quite so much.
And Luigi, you're filing tax returns on behalf of these people, aren't you?
That's my defense. I'm with law. How can I be breaking the law if what I do is help my clients to comply with law? Now, the one area that I do get a little nervous about is all my clients come to me and say, Luigi, what do we do about the banking situation? And that's where I watch my words very carefully. And there's another session about that, which I'll probably cover some of these points in that other session.
Okay. Now, having covered, essentially the legal risks for basically anybody, whether it's in a cannabis business or an ancillary business, what are the business risks involved for an investor, even in a Canadian setting where, it is federally legal, at least on the production and distribution side. What are the actual business risks that investors face?
Right, well, I'm happy to lead that off because, since we're not spending so much time thinking about our federal compliance, it's if you realize this or you're not. I look at, maybe the core fundamentals of what makes any good business. You want to have a competitive culture. You want to have a commitment to innovation, staying ahead of the curve. Hopefully you want to have some kind of economic advantage. And so to me, the number one message that I want to leave this panel and group with today is that the future of cannabis is going to be sun-grown. If you have an opportunity to invest in indoor infrastructure today, know that that infrastructure is going to be economically and certainly environmentally obsolete in the next 5 years. We're talking a very short-term time horizon. At the dawn of this legal and regulated industry, there was an opportunity to take what had been done in the black market and improve on it. And the operators decided that the improvement on the bunker cultivation strategy was a really big bunker. Now, unfortunately, by using artificial lighting to fuel photosynthesis instead of sunlight, you're paying a substantial amount, in the case of Canadian cultivators, anything above 50,000 square feet, hundreds of thousands of dollars a month, to supply the planet with a lower light quality and a substantially lower light quantity when the sun is free. So people say it's difficult to secure a greenhouse. It is. I've done it. But it's feasible. It's difficult to quality assure in a greenhouse. It is. But it's feasible. So know this. The future of cannabis cultivation is sun-grown. And anybody who puts money after hearing this, if I hear about it, I'm coming for you.
None of the 5 New York licensees are in here right now, because I'm pretty sure that's all indoor at this point. But thank you for that, Ted. Appreciate it.
So, actually, I agree with Dan. If I could figure out a way to short the indoor grow facility market in Denver, I would. But that's not really our core business. I think that when we first started looking at this industry 6 years ago, I was a little surprised by the differences between this industry and the entrepreneurs that I was used to dealing with in technology or biotech in Silicon Valley. And the companies were generally unsophisticated and the managers unprofessional. The industry was really fragmented. There were no leaders, there were no standards. The marketing and branding bar was extremely low. There was a lack of access to capital. They weren't building the right teams without the right strategies. And that was 6 years ago. It has changed over the last 6 years. The people in this industry are better than they were 6 years ago. The ideas are better from a strategic perspective. I think there's still an issue with people who are attracted to this industry have a different risk profile than what you would see in any other industry. And that's something that people have to be really wary about. And they have to perform a lot of due diligence, more due diligence on this particular industry, or more due diligence on an investment in this particular industry than they would perform on any other investment in any other industry that they were looking at.
And it's harder to do that diligence in many cases. I mean, it's not like you have a lot of examples that an investor can go to for comps. Right? This industry is really new, and if you try and look at a comparable business out of California and looking to invest in a business in Illinois, it's meaningless. And that's sort of one of the other business risks. I think you guys hit on some really important ones here. 100% agreed on sun-grown. I see a lot of people building these really beautiful, fancy, high-tech dinosaurs that they're going to 5 to 10 years from now. There's just absolutely no way they're going to be able to compete on the economies of scale with what's coming from sun-grown produced medicines in cannabis. I think that's a really valid point. One of the big risks that folks have, in addition to trying to find sophisticated operators, that can be really challenging. Feeling comfortable with the people you're putting money into, making sure that they have a team of folks that didn't just come from the cannabis world or the black market cannabis world, but also understand business management. But one of the bigger risks in the United States, at least, is scalability. And when you put your money into a business, you want that business to grow large enough for you to see really large returns, or maybe able to get a big return once it's sold a few years down the road. That means businesses often have to expand beyond their original business plan in the United States, because we have this patchwork of state laws and state regulations. taking your business from one state and expanding that across the country, expanding that into different markets is a really big challenge. A lot of states have residency requirements, so if you set up let's say you're a very successful cultivator or you have a very successful edibles company in Colorado, you want to go into another market, you may be prohibited from doing so because you're not a resident. You may need to find a resident to partner with and figure out that relationship really quickly and be comfortable with that person or those people that you're partnering with, or you may need to license your brand and your technology to somebody in another state, but then you don't have the same kind of control over your production that you would if you controlled that company yourself. And there may not be opportunities to apply for licenses. Most states, they have a limited number of licenses. They accept applications for them all at once. And so if you do really well in one state and you want to go to another one, there may not be any licenses. You may be looking to try and acquire one, and that's a very challenging process. People tend to differ wildly on valuations of these businesses, again, because you can't go and look at, there's thousands of other companies and here's how they get valued. And so the value of the company is basically whatever the license holder thinks it's worth and whatever the investor thinks it's worth. And if you can find a happy medium, great. More often than not, you can't. And even if you can navigate all of that, the regulations in one state that govern how, say, a cultivation facility can operate or how an infused products manufacturer can operate may be dramatically different than the regulations in another state. So even if you're able to navigate all that and get a license or get access to a license in another state, you may not be able to take all of the intellectual property and all the protocols you developed in one state and just plunk it down in another state. You may have to radically redesign a lot of what you do. And then, of course, just in terms of scalability, in most instances of a company, say, starts in Colorado and they've got a large-scale production facility for whatever non-federally illegal products they produce, and they decide they want to expand that into California, they would just expand the size of their production facility in California and ship their goods. Again, can't do that here. You need to go and reinvent the wheel every time. So having medium to large-scale, say, cultivation production facilities in 5 different states is going to be 4 times as expensive as it would be to try and just expand it all within one facility and then ship that product across the country. So these are challenges that are inherent to this industry that you just don't see elsewhere, and you make investing a little bit more challenging.
Now, I just want to know from each of you, please, and maybe they'll be the same, maybe they'll be different, but the red flags that you look for in a target. And I will tell you, I get clients that come to me all the time and try to pitch me personally on investing in their business, which is a terrible idea, obviously. Anyway, as a lawyer, it can be done, but I never do it. And one of the worst ideas I ever saw, and personal anecdotes are welcome too, was a cannabis-friendly bowling alley with day glow all the time, and you can get stoned and roll your 10.
That sounds awesome.
It sounded great in theory, and then, unfortunately I said, well, why do you want to do this? Why don't you just want to apply for a license in the state of Washington? Convicted felon. So another red flag, at least personally for me. So I will go from the pros. What are the red flags you look for in a target? And I'm hoping they'll be diverse. I have a feeling they'll be the same, but again, personal anecdotes on pitches are totally welcome. I know you guys have seen some stuff. Come on.
You get a lot of cowboys in cannabis cultivation. A lot of people who, themselves or their uncle grow the best dope you've ever had, period, bar none. If you're talking to anybody else, you're an idiot. And they don't really have the humility to appreciate that industrial agriculture is a very different ballgame than cultivating plants where you have 100 of them at a time and they all have names and you can, stroke them at night and trim them perfectly. You've got to be able to create a scalable and deployable vision. I mean, I also, I'm not an investor in the cannabis space, but I invest every day, about 16 hours every day in my business, and I'm obsessed with it. I don't have a wife, I don't have kids, I have this, it's my life. And I also acknowledge that it's going to be another 5 or 10 years of going down this path before we've come close to realizing what I aspire to accomplish, what our vision is on my team. And so I think anybody who has a get-rich-quick scheme in cannabis or anything probably is not the best person to talk to. But you need to find operators who have the humility to understand what they don't know, and the humility to say that it's going to take a long time. If I was a VC and a potential cannabis company came to me and was honest that, we really do have to walk through the woods on legislation, and that's a slow-moving beast. I would feel a lot. We're going to blow this thing up in the next 6 months, which I've definitely told investors before when I was young and naive, and I realized I couldn't deliver on that prediction, so that's not part of my pitch anymore.
I grew up in California, and outside of San Francisco, places like Half Moon Bay and Monterey, there's lots of people who grow strawberries, and in Northern California they grow grapes for wine. I've never met someone who grows grapes or grows strawberries and says, I grow the best strawberries in the world. I grow the best grapes in the world. I've met the world's best cannabis grower 1,000 times. And there's dozens of them in Colorado, there's dozens of them in Washington, there's dozens of them in California, there's dozens of them in Canada, Jamaica, Israel, Spain, the Netherlands. And it's something that is unique to this industry at this specific point in time. Our master horticulturist in Canada, her name's Françoise Levesque. She has grown millions of conifers, baby trees, millions and millions of conifers. And we hired her because not once did she say, I grow the best conifers in the world. But she runs that facility. It is ship-shape, it is clean, it is pharmaceutical grade cannabis. You walk in there and it looks like a silicon wafer manufacturing facility. And so my point is that there's so much bravado, there's so much ego in this industry, and it's the first red flag that we look for.
So some of the red flags that I see that should be out there for investors is if you're being courted for a business idea and you're a wealthy person who's holding yourself out there as a potential investor, you should understand that there's things like private placement memorandums that ought to be put into your hands. And if one isn't, that ought to be a red flag. Then once you open up that private placement memorandum and you start reading it, we've already mentioned the lofty projection scales, where revenues are in the multi-millions in month 2 is a red flag. And then when you look at those projections, and again, the accountant is coming out here, you look at the bottom and you look at the income tax provisions, and if those income tax provisions are just at the standard corporate rate and doesn't take into account 280E exposure, that too should be a red flag. Those are the 3 main red flags that I see.
Yeah, I think you guys hit on most of the cultivator. I couldn't agree with more. Actually, I say regularly, if you meet a master grower who says, "Hey, I'm not the best in the world, but I'm trying to figure it out," that's who you want to hire. But they're really, really hard to find. So I think you've hit on really most of it. I think if the company that's pitching you, if all of their experience is just from black market cannabis, and they don't have anybody with really solid professional operations experience, that's a big red flag. And this is not to disparage folks who've been doing this in the black market. I think most of those folks actually wouldn't be here if it wasn't for them. But what we found is translating the experience of running a black market cannabis business or a gray market cannabis business into legal markets is a lot more challenging than people realize. And you generally, what we look for are folks with really strong operations backgrounds, so folks who run and manage large-scale operations outside of the cannabis industry. That's very helpful. If they don't have that, they're probably going to struggle a lot more than they might otherwise. I think you guys have hit on most of the red flags. I do want to flip this around for a second, though, and talk about, for the companies that are looking for investments, red flags and investors.
Please, yeah.
And I think that, in many ways, I actually think that's more important because we see a lot of games being played by investors who come into the space thinking this is an immature market and there's a lot to take advantage of there. And we do see a lot of folks getting taken advantage of. So, I mean, I hate to say it, one of the red flags that I've seen, and this is by no means universal, if an investor has Goldman Sachs in their background, that's usually a red flag. Not always, certainly not always, but we have seen it in a lot of folks who come from that background, particularly if they haven't been in these investment firms for very long. If they were there, if the resume at Goldman Sachs was 7 months, or something along those lines, there's usually reasons why they didn't stay longer. But it's true. You have folks who have sort of made a negative name for themselves in their industry, who can kind of hide their backgrounds in the cannabis industry. And we've seen a lot of that. So if you're a company looking for investment and you start seeing, you start hearing things like, oh yeah, we'll have that, that contract will be ready for you soon. I'm sorry, there's a delay. The lawyer went on vacation, or you know how lawyers go. Things take a long time. And yeah, I know we're 10 days past our exclusive window to finalize the deal, but just give us a little bit more time. These huge red flags. And then if the deal changes on you, a few weeks in, which happens often, so an investor will purposefully drag along negotiations. We see this happen a lot, where they come in, everything's great, they do a big dog and pony show, they come off extremely credible, and then it's 15 days in, 30 days in, 45 days in, deals haven't really happened. They'll sign an exclusive sign for an exclusive investment window, so other investors that company may have been talking to will essentially drop out. And oftentimes as a company you buy, there may be a deadline where you have to get your store open. And so things start dragging, they're able to drag these things out to the point where other investors have dropped off. Now there's a lot more pressure on that operator to get investments so they can get open, and all of a sudden deal terms start changing. And we've seen these types of games, the means for investors to essentially steal companies from the original owners by putting in provisions into their contracts that the companies are not sophisticated enough to truly understand, or even if they do, they're under such time pressure under the gun that they're going to agree to it anyway, and ultimately they really wind up getting screwed over.
Oh, we got a question.
So can you talk about the balance of where the money from investment is coming from, private equity versus, say, family offices, and who's really putting the money in and why?
Yeah, go ahead.
So I don't mind speaking transparently. We've raised in equity financing sort of close to 10 million, I can say, and then we've done another debt piece that was a little less than half of that. So I guess I'll talk a bit about the kind of mechanics of that for a minute, and then talk a bit more about what we talked about with the red flags. So it was all for us, sort of high net worth, private equity kind of type of investors, not firms, not boutique institutions, but individuals that we captivated with our story, and they had trap lines of individuals that they wanted to go out and talk to again. And I think that is representative of what the audience sort of looks like today. There are a couple smaller financial institutions in Canada that are putting together especially public offerings like RTOs and public deals. But even they are not the creme de la creme of Canadian finance, and with all due respect to Canadian finance, it's sort of the red-headed stepchild of Wall Street, in fairness. I don't think we're going to see large American institutions or boutique American institutions come into this space without a specific mandate to do it, such as privateer. And so we had to find people, individuals, one by one, that believed in what we did and actually were culturally aligned with what we did. To paraphrase Fred Wilson, in an industry that has the potential to be infinitely commoditized. If you listen to the academics downstairs, they're going to tell you that this is going to be $2 a gram, Walmart cannabis, no differentiation. It's going to be a commodity product. I certainly don't believe that, and I don't live those values in my company. And I have to find people that believe in that culture and believe in that vision of creating beautiful, differentiated products that consumers will get excited about, and users will become a part of not just our retail base, but also our tribe. And investors that excite me are people that want to talk about the 10-year future of what this could be. Talking about beautiful, curated dinner selections with cannabis pairings, or how this looks like the beginnings of the California wine industry. You have to get people that are passionately dedicated to architecting the future that they want to participate in. I tell my team all the time, we're trying to grow products that we would get excited about. And if your investor group are people that are looking at the massive financial opportunity in this in exclusivity, they're going to get very bored very quickly because it's a slow and steady progression. Nobody in Canada is getting rich quick off of all this kind of thing. So I think the traditional mechanisms, if I was selling a copper mine to investors, I've come at this from a very different approach. So find people that are passionate about cannabis. It's not that hard. Even people of high net worth are occasionally passionate about cannabis.
For the most part, we're not seeing much institutional capital in the space yet. Privateer is actually the most successful company in the country. I think we landed the only institutional investment deal in space today. So, right? Okay, so you can talk more about that. But for the most part, it's virtually non-existent. The firms are not quite there yet, and that strictly has to do with the status of federal law. The vast majority of investment in the space today is still friends and family and angel investors. That's where I would say, I don't think there are figures, but I would guess it's somewhere between 50 and 70% of the money is probably on the higher end of that range. Is coming from either friends and family or angel investors. I think it's a testament to like the ArcView group, for example, which is a network of angel investors. I was at the very first meeting. I think Brandon, you were there. We were like 2 of the 10 investor members in the room, and half the investors were just companies that had enough money to pay the fee but weren't actually going to invest. But it was really 10 companies around a room, and today they do a conference every 3 months with 250 to 350 accredited investors around the country hearing pitches from companies, startup companies that are looking for investment in space. So it is still primarily those angel investors, but the network of angels in particular has grown dramatically in the last 5 years, particularly in the last 3 years. We've seen a huge increase in the number of folks who are willing to put their private money to work. The other trend that we've seen, I think, in the last couple of years has been the emergence of cannabis-specific investment firms or investment funds. We're guilty of that. We launched a credit fund with Richmond investors, and so we're starting to get into that ourselves. And there's groups like Poseidon Capital Asset Management and others that have sprung up to specifically to fund the industry. So now when you go to a lot of these investor conferences, you usually have a lot of funds that are pitching the investors to make investments in them so they can invest in other businesses. So that's sort of the current wave. I think that the next wave will be more traditional institutions, but we're just not really there yet.
So our first round was $7 million, and we raised it from high net worth individuals and family offices from around the U.S. and around the world. While a small percentage might have had a passion for cannabis, the vast majority of our initial investors, and in both rounds actually, they were looking for a financial return, but they were generally, the vast majority were looking for a social return measured by ending harms caused by prohibition. And they would define those harms in a wide variety of ways. Our investors came from all across the political spectrum, but they were motivated by something in addition to a financial return. And that was consistent in our first round. That was $7 million. The second round was $75 million. That was individuals, single-family offices, multi-family offices, and then two institutional investors, one of which we announced, Founders Fund. The other one is still anonymous. Something's happened over the last 90 days or so. Can't quite figure it out. I'm trying to figure it out. But there are a dozen or so really large private equity firms in New York and California that have started to really dig into this industry. And we didn't see that a year ago. We didn't see it 6 years ago. But something has happened. And my hypothesis has something to do with this ballot initiative in California. And for the first time, large firms believe that this is inevitable. This is going to happen. And so they're starting to put teams on this to try and understand this industry. And so we'll go out and raise another round at some point in the next 6 to 12 months. We'll raise at least what we've raised before, so at least another $82 million to invest in the industry. And the vast majority of it will come from institutional investors.
How are you going to spend it?
Deploy more than half of it outside the United States. We're really intrigued by what's happening in Canada with the election of Justin Trudeau. Really interested in some of the initiatives that are taking place in places like Australia, which legalized medical cannabis about 6 weeks ago. All of the EU really feels like how the United States felt 2-3 years ago. So, and I know talking about feelings and investing at the same time is a little strange, but I spent a lot of time. I was in 12 countries last year, walking around Europe, meeting with government officials and regulators and people at the Ministry of Health in different countries. And it really feels like Colorado, California, Washington fell 2 or 3 years ago. And so we're starting to see rapid change and rapid velocity in Europe.
That's extremely interesting. And just kind of a quick, I guess, segue, but we can get back to regular programming in a second. In Washington, with these cannabis companies, they have a 6-month residency rule. People who don't want that rule view it as protectionist, meaning these investment firms cannot come in from anywhere in the world or even in the States to fund these companies to get bigger to be able to compete. And a policy question has arisen slightly as to whether or not all of this investment is a good thing when it comes to social impact, because are we creating the next big tobacco? And the prohibitionists have hooked onto this. I think Brendan's intimately familiar with 2 ads that ran about a week apart in the New York Times, maybe like a year and a half ago, where the prohibitionists basically said, hey, the hippies are being replaced by venture capitalists in power suits, and the bottom line is money. It's not social impact or health policy that they care about. They want a return, and they want it instantly. So my question to all of you on the cutting edge of investment, and I don't have a position on this one way or the other, but because this is a policy conference, I have to ask, is the money a good thing? And on top of that, isn't it in some way necessary to get to legalization, where the federal government has taken a position that robust regulation is the way forward and that costs money to accomplish?
I think, all right, you should follow, because if I follow you, I'll probably trip over myself and fall. But I took a piece from Mark yesterday when he opened. He said, if anybody's looking for a costless path to the end of prohibition, they're not going to find it here. And one of the core issues that I actually wasn't as familiar with is talking about how there's been a lot of talk of campaign finance reform in the United States. It's an issue that we don't have as much in Canada, because our political engines, our political machines are funded by millions of dollars, not hundreds of millions, and throwing money at the problem just doesn't seem to be as prolific in terms of potentially lobby influence and that kind of thing. There's certain structures that are built in place to prevent that. And so the notion that large singular entities grow to a place where they have a lot of lobby power and they'll be able to contribute millions of dollars to political campaigns. I mean, if you're going to talk about campaign finance reform, then you probably shouldn't use cannabis as a scapegoat. I mean, it would be relevant for you just to reform your entire system and maybe be more like us, lefty socialists up in Canada. But moreover, I think that there actually has been a pretty substantial anti-corporate sentiment through this entire policy system. And looking at commerce as a vehicle for social change is actually anathema to most academics. While they have a very sophisticated understanding of a variety of different academic, clearly the amount of information that I've gathered in the last 2 days is just overwhelming. My mind is reeling, yet they look at commerce with the lens of economics 101. If it's profit, that's the singular motive. Whereas the reason that I get out of bed every morning, and the reason that people get out of bed every morning on my team, is because we believe that we serve a higher value. We believe that there's social impact to be made. We believe, as a group of millennials for the most part, that commerce can change the world, and that we're building something that's going to have value. Other people will build on top of it. Other people will stand on our shoulders when they create the next generation of cannabis greenhouses. So sure, there will be profit-motivated individuals out there, and I'm sure that without the financial incentives that this new industry can bring, you wouldn't have as much excitement and investment. But it's not an us versus them conversation. It should be just that, a conversation.
I have 2 points on that question. The first one is, we have 250 smart professional employees who wake up every day motivated to not put the hippies out of business, but to put the cartels out of business, to put the illegal growers out of business, to put drug dealers out of business. And in Canada and British Columbia, they produce about $6 billion of cannabis each year. In British Columbia, primarily grown by outlaw motorcycle gangs, a lot of it comes across the border to the US. I'd like to put them out of business. I'd like to put the cartels out of business when it comes to cannabis, and that's our objective. The second point that isn't often talked about has to do with residency requirements. We're firmly opposed to residency requirements for a number of different reasons. Name one state that would say We don't want any outside investors coming into our state to invest in these technology companies. We don't want any outside investors coming into our state to invest in this biotech company. It just wouldn't happen. And yet, oddly, in this particular industry, that is what happens. And there's two problems with it. First, I believe it's unconstitutional. Second, and I'll let the lawyers talk about that, the second point is you get adverse selection. So all that happens there is people who are willing to hide the money, people who are willing to go around the rule of the law or the intent of the law, just bury the money, funnel it into the state. And so all you do is attract the illegitimate players, right? The illicit players, the black market investors who want to invest in that market. So from a policy perspective, that's the biggest mistake I see in the regulations in Washington State, in Oregon, in Colorado. Although Colorado has moved fairly quickly and Oregon has moved fairly quickly to reduce or eliminate the residency requirements, California is making a big mistake in their initiative in that there is a residency